some of these smaller countries, do you see a central bank play into holding Bitcoin as a treasury asset?
I think they already are.
Yeah.
A lot of the people or the Bitcoin maximalists that hold Bitcoin don't hold it to do anything with. They just hold it to hold, and they don't trade it. So it's not.
And a lot of those maximalists want to see every single Bitcoin mixed, or effectively tainted, would be another word. Which for an institutional investor, I'm not quite sure if they understand this.
People like to hold stuff that's scarce. I mean, that's just human nature. But just remember, this is very important, and I think it's taken Bitcoin a long time to get to $25,000 because most people that are investing in Bitcoin and other cryptocurrencies are millennials and younger. Now you're seeing a lot of the institutional money can't stay out. Yeah, they can't stay out of it.
What do you see as the best current use case of Bitcoin, and more importantly, why you hold it? Why?
Coming up on episode 5 of Hard Fork, Loretta Joseph. Meet the leaders in blockchain and the future of finance. This is Hard Fork.
Greetings all. Hello, Loretta. Welcome to Hard Fork.
Oh, well, thank you for having me. I'm sorry I've been such a nightmare to get organised to actually do this, but you've got my undivided attention now.
Fantastic. I actually understand why now, because I watched a couple of your recent interviews, and I see you've been locked in a room with no window for 2 weeks.
Oh, yes.
I thought they stopped doing that to Australians a couple of 100 years ago.
Oh my God! I mean, yeah. Even if you're in prison, I think you get 20 minutes of fresh air. I'm like, this is. But I mastered the three sheeting technique, which I actually learned from the best Western motels on YouTube in New Zealand. I'm a master at using the 3 sheets to make a hotel bed.
Well, we all have our gifts, Loretta.
I'm very excited. If anyone who wants, I can share the link.
Very good.
Do a great job in New
Zealand.
Zealand.
I've got some quarantine coming up in about a week's time.
Oh, lucky you, Sean.
I just think we need to get through 2020 and hit midnight on 31st of December and just go, all right, that was gone. Let's just move on. Well,
I tell you what, 2020 has been pretty bloody difficult, but the only thing that's kept me sane has been in the crypto space, because it's been one hell of a ride. Look, I'm fascinated to have a chat with you. You're obviously talking to some very big players on a regulatory and from a legislative point of view. So you're quite an important guest to have on the channel. I'm really looking forward to this chat. But for the average punter that's watching this, who only gives a shit about the price, you made a comment in the last week that you maybe see some of these big institutions taking up to a 10% position in Bitcoin, which would we're talking $1 million plus Bitcoin if that happens. That's a biggie, Loretta.
It's plausible. If you speak to my friend Roel Powell, he and I have been talking about this for a long time, and I don't think
he's actually coming on this channel in the near future.
Oh, he's my Twitter crush. He's awesome. He's awesome. He and I were correlation traders back in the 1990s before any of this stuff was cool. We used to do stuff on pieces of paper with telephones. It's interesting, and never say never.
So, a 10% position by these big institutions, let's get into the nitty gritty here. I mean, what sort of regulatory framework is going to have to be in place? And, you call yourself the central bank whisperer, I heard.
The governor whisperer.
What are you telling them? What's going on? What's going to happen?
Well, I try to be the voice of reason, because there's not too many people like me in crypto. I'm 51. I was a banker for 32 years. I think I've traded every asset class. I started my life on a trading floor with a piece of paper and a pencil in a bond pit. Markets are markets. I think that's at the end of the day. But it's interesting because I sit in the bridge between the exuberant technologists who think that that Bitcoin and cryptocurrencies is the be all and end all, and the regulators and the government at the other end who are going, we don't even understand what the technology is, so we don't even know what this thing is, and it's not backed by anything. So it's my role has been to sort of make both sides communicate better, because I think that's the biggest problem. There's no level of communication, and they're talking about very different things. So I've tried inadvertently over the last few years to make both those sides of the fences come together. And I think I learned it from one of my greatest mentors is Robert Kahn, who's the father of the internet. I rang him up in about 2015. I said, you better teach me how you built the internet because I have no clue. And he probably thought I was completely mad. But so since then he has, and I think that's been important for me to understand open systems. And that was my whole journey into Bitcoin and understanding why it was built and who built it and what they built it for. But I think these conversations need to be had, and the internet taught us one thing: it was the walled garden approach doesn't work. So there has to be somewhere that the evangelist technologists who think that the libertarian way is going to work, and you've got the very centralised world over here of how financial markets work and central banks. Both of them are extreme. So there has to be somewhere in the middle that they both come together and talk. And if we're going to be writing regulations and legislations, it's important for me that we have both sides at the table. Because if we don't, we're going to get very one-sided laws and policies.
Well, maybe
Lawrence, I just wanted to introduce you to the audience once again. I mean, you're a fintech entrepreneur. You've had trillions of dollars go across your platforms. So I'd love you to maybe start off here and give Loretta the first question.
Yeah.
I think Loretta, what I've been dying to speak to you because I know that you've been dealing a lot with the central banks, and I think if you want to get a really good appreciation at a macroeconomic level, the benefits of sort of the whole blockchain, digital asset, digital security, sort of future financial service network, what are the benefits that the private banks actually see? I mean, when they look at the current state of, the global financial services markets, lots of quantitative easing, ongoing stimulus, what are they looking at when they say, okay, how are we going to manage ourselves in the future environment? What does that look like? And how does sort of digital assets benefit them or coming to digital currencies benefit them in terms of that policy and that objective?
There's two parts to that question. What does the blockchain technology do? Well, it's an immutable, transparent, secure database. So we all know that. Banks generally and central banks have been scared, and I always say this to the crypto community. It's like, had you have looked at it from my lens, I wish that Bitcoin had been called Zen token, because nobody would have cared. But the minute you put coin or currency, you ruffle everybody's feathers. So central banks are like, oh, that's under our monetary policy. I'm like, no, it's not. So I think for me over the last few years, it's been establishing what a cryptocurrency actually is and what a digital asset is. And we in Australia, back in the early days in 2015, 16, we went to the government and said, listen, these things are digital assets. They're not, because I think the FATF were talking about virtual currencies, and our finance minister was talking about digital assets, and the regulator was talking about crypto assets. And I was like, well, what are we all talking about? So we came up with the one term digital asset, and I think that's important because everybody was talking about different things, but sometimes they have overlap, sometimes they don't. And then, so what's a digital asset? It's the way that assets, a new asset class. There's securities, there's commodities, there's many asset classes, and I've traded a lot of them. This is just a new asset class because we've never had a digital asset until crypto came along in 2008. So I think we should be all excited that we've had the birth of an asset class. I haven't seen one before, and I probably won't see another one in my lifetime. So that was exciting. So I think getting everybody to agree on the same terminology has been the one thing that I've done, because now, 3 years ago, nobody was talking about a digital asset. Everyone was talking about crypto asset and virtual assets. And I was like, well, they're not virtual because they exist. Digital is a much better term because it means that something doesn't exist in a tangible way, but it exists on the internet or an open source manner. So that was important to me. And then, talking to central banks, so I think there are 2 points to it. The underlying technology, I always say to people, you've got to look at things like blockchain. They're not disruptive technologies. They're actually, I think they're more innovative technologies, and they're beneficial technologies to everybody. But Bitcoin came along and the banks saw it as Bitcoin, like a currency. And they thought that this was, the digitalization of money, which it is, but money is not currency. We have to go back in time and figure out what money is. Bitcoin in its inception, the first ever legal case that came up in the US said that Bitcoin was a commodity. So we look at it. So then I think that's important, because once we had a definition that it's a commodity with more characteristics to like gold, boom. So it's not currency. And I think when I go into central banks, I say, look, this is not legal tender. Because once you say that to them, this is not legal tender, their mandate is not crossed. Gold is not a mandate of the central bank, but currency is, and anything with a piece of paper that it's got a stamp on it is a fiat currency. So I think that's important that you separate them. The technology.
Loretta, can I just jump in quickly just on that note there, where you're talking about how the US has ruled what Bitcoin is. Being a Bitcoin maximalist with a small n for the last 5 years, you become what you're around, I guess. And the Bitcoin crew had been convinced that Ethereum was 100% a security. It was never going to fly. It was dead. Don't touch it. You're an idiot if you talk about it. Literally the community would shun you for even mentioning the name. Where do you see Ethereum right now, and more specifically, we're seeing all these governance tokens being issued in the DeFi space in Ethereum. How do you think that's going to play out?
Listen, I think for me the biggest problem with Ethereum, so Ethereum proved that tokenization worked. It's the one thing that it did, and it had Ether, which we could use in ICO. So Ethereum, won in that regard. I think Ethereum's problem is it doesn't scale. And I when my daughter had crypto kitties, which were on it, thank God they blew over because they couldn't scale, because I would have, not trying to explain to a regulator what a crypto kitty was another interesting experience.
My Ethereum crowd is screaming at their screens at the moment going, it's going to scale.
But it doesn't at the moment.
Leave that aside from a legal standpoint. How do you sort of see from a regulatory standpoint?
Yeah, so I think Ethereum has proved what it is, and it's like the follow-on to Bitcoin. Bitcoin, I think when you're talking about the two, it's very hard to put them in the same bucket, because Bitcoin is the digitalization of money. Now, money means something very different to everybody. Do you hold it for a store of value? Do you hold it as a payment system? That's not a good idea, because it wasn't built to be a payment system. It is slow, it's clunky, it takes 10 minutes to do a transaction. Why? But it does one thing very, very well, and that's security. And so I think we have to sort of break open the bucket a bit. So, money comes from barter, and this is all it is. It's like if I think one Bitcoin is worth 19,000, and you think that I should give you my little Russian doll, that's a fair trade. Money came out of barter. We used to try to trade, corn and potatoes with each other. Then we moved into stones, then we moved into rocks, then we got to gold, and now somehow or other we've got pieces of paper that with a stamp on that don't mean anything. So I think it's money is different things to different people, and I think that's where the lines get blurred sometimes, because people assume that money is fiat currency, and it's not. So I think that's why Bitcoin to me is much more like digital gold. It's a store of value. I think using it as a payment system's not ideal, but it wasn't built for that. So then you have the new things like Ethereum. DeFi scares me, because what do regulators do? Regulators protect the consumer and the investor. So we have a problem with DeFi because there's no consumer, or there's no intermediary, which people usually regulate. So this is going to be a problem when people are trading peer-to-peer, but they're effectively doing all the banking functions that a bank does, asset management, buying, selling, arbitrage. It's going to become difficult for regulators to say, well, this is peer-to-peer. Should we be regulating it? But then you've got consumers, investors that will come to you and say, like when some of the sushi thing happened, and the references to food, I don't understand. I have to say that. I'm a bit confused about so many food references. Is an interesting one, but, people are still going to get upset. And where does people go, consumers, investors, when they get pissed off? They go to the regulator. So it's an interesting transition. I think it will scale. But I always say to the DeFi community, you forget, like we used to do what you do instantaneously because you have technology. We used to do it with a piece of paper and pen. So I don't think anybody that's in DeFi is a great trader per se. They think they're great because they do it with the technology. We were doing this stuff way back in the day, but we didn't have the technology. So I think the technology has come to meet the financial markets. Central banks are worried because Libra came along. And all of a sudden, they saw that Libra could act, a tech company could effectively rival a sovereign state. Now, I don't think Libra is actually a blockchain, but I think, the issue that the central banks may be made irrelevant brought them back to the table saying, no, we can't lose our relevance. So what do we do? Digital central bank digital currencies, I think, are really interesting because nobody actually knows what they want. And I think if you look at some of the models that have been created in central bank digital currencies, the China model is not really what we should all be having in the world. I think some of the other models where you're saying, the retailers being banked by the central banks, they're not a good idea because that's not what central banks do. They shouldn't be giving you a home loan or
thoughts on that?
Just jumping in there, Loretta. I mean, the central bank really is responsible for controlling inflation, right? And they're using money supply effectively to do that. But, I would imagine that digital currencies would give them additional capabilities. So it's to control the money supply.
Yeah,
cash you can put underneath your bed, which is what they did in Japan. Here, you could literally evaporate the money supply at will. You can apply taxation.
You can control your people.
Well, I mean, you want to call it control. These are just carrying out existing policies that have been accepted by, the populace. Yeah. Some people try to get away with it. Others just pay their taxes. So I don't think it affects most people.
Yeah, but I think I always say to central banks, be careful what you wish for, because if you have technology and there's unintended consequences. Like when I think I have a 16-year-old daughter, and she grew up with the telephone in her left hand, so her understanding of risk, her understanding of much things is better at 16 than I was at 35, because I had to learn everything in a book, even when I was at university. So we have to be careful when we're writing policies as older people, because they need to be thinking ahead, not behind. And we can't retrofit a digital asset into the financial system. I mean, let's be honest. And central banks, digital currencies, I think you've got to be careful what you wish for, because you're right, cash is the most decentralised thing we have. We can all pass cash around to each other and we can't trace where that was. But with a blockchain we can. And if banks can start to control money into people's pockets, then they control everything in your life. So I'm very cognizant of the the unintended consequences.
Loretta, on that note, I've got a interesting question for you. We'll get into the whole sort of macro environment of China's central bank currency, the way it may play out in the US. But I'm actually completely fascinated by the fact that you went to India in 2005 and ran a global bank. I actually lived in Mumbai between 2003 and 2005, so it's a bit of a shame we haven't really
missed you.
Yeah, I probably missed you by a couple of months. So there's literally hardly any Westerners in Mumbai. We certainly all knew each other, but one thing I know that certainly when any Western females running big corporations,
and especially single white females.
So I mean, you're clearly a maverick. I mean, you're operating at some very senior levels globally here. So specific question around India, how do you see the whole sort of digital asset space? It's often overlooked, that often in this space, we're always talking about China and the US. People seem to forget that India makes up a large percentage of this planet. So what's going on there?
Yeah, so I've been involved. I worked with Unicoin, who was one of the exchanges there. I've been involved in India trying to get them to have a proper regulatory framework since 2015. Myself and Lord Begum Desai, who used to run the London School of Economics, who's also now, I think he's taught 7 central bank governors that are sitting in office today, has been a great help on that, because he also understands monetary policy and fiscal policy. So I think India is a different kettle of fish. Unicoin, we were one of the groups that took the central bank to court, and we won the case that they couldn't ban Bitcoin. So I think it's India is like a big elephant. I always say to people, you can't go and push her from the back, because she'll kick you and she'll kill you. But you've got to walk next to her like a nice old auntie elephant and pat her on the ears and say, "Look, we're right." So you've got to go at the pace that India wants to go at. And I think the problem is at the moment, they've had COVID, they've got problems with the Chinese on the border. They're not particularly worried about digital assets and Bitcoin, and I think it's a shame because the entrepreneurial community and the kids, it's got the youngest population of the world, and kids in technology. It's a shame if they don't start to adopt reasonable regulation and sensible regulation that are saying, oh, we don't like it, we'll ban it, because that has a bad impact, I think, on future generations and the economy. I work with the Ministry of Corporate Governance now, and I spend a lot of time giving lectures to all the regulators in India, explaining what digital assets is, what a cryptocurrency is, what the underlying technology does. I think it's always been the long game for me in India. I lived there for long enough to know that there are a couple of things. In India, you've got to have a lot of patience.
I know.
You have a lot of patience. There's two sides to every story, and no doesn't mean no. You just ask the question a different way. So I think you hopefully in the next couple of years, the government start thinking more closely, and they start to understand a bit better that they can't really sort of ban the use of cryptocurrencies, and they can't stop people using technology. So India's a bit slow, but I think she'll come around. It's I've been doing it now for, as I said, for 5 years. It's the long haul, but the more you push, the less you'll do. And the government doesn't understand it. This is the problem. The ministries are a little bit confused because they actually don't understand what the technology does and the likes of what Bitcoin does and the exchanges. So, but I think we'll get there. But it's just been a bit of a hard slog over the last number of years.
I'm sure what's going to happen is as you start to see the more advanced economies that have adopted, the technology, which is probably going to be I see the wealth management centers. Singapore, Switzerland, certain maybe New York, but with that sort of advancement, this is something that will export itself very, very quickly into emerging market countries. What I think we had Simon Dixon on the show a few sessions back, and he's always got some great insights. Simon always has stated often that he thinks central banks being able to, for example, deal direct with the populace during certain conditions, such as delivering stimulus, is far more effective than the current approach where the government / central bank is basically allowing the financial institutions to figure out how to distribute stimulus money through their, small business loan segments and
helicoptering money would have been great through COVID, and I think that's what they're starting to see. Being able to helicopter money into the people that need it without going through the government, and having the ability to move monetary policy and more fiscal policy now is going to be how you're going to see these emerging markets start to adapt post COVID. So I think that's one of the key factors. I think where you're seeing so much upspring in central bank digital currencies, because everyone's going, how do we helicopter money into these people? We don't need to use those people. So, well, you can do it, but should you be doing it? This is my question as well to central banks. Be careful what you wish for. Should you be doing it under the mandate you have?
Do you think that there's a benefit? I mean, not just looking at it at the central bank level, but say sort of the ability for a country to be able to govern, optimize the way that its financial monetary system is operating. Do you think the central bank does need to expand some of its capabilities based on new developments in technology?
Oh, definitely. I mean, I think this is the interesting thing. I think that the retail focus of central banks is got out of skew. I think what they should be looking at, because I remember going in about 2016 to the central bank governor of Canada, and I took in Samson Mao and Joseph Weinberg, who are Bitcoin maximalists, and I thought his eyes were going to roll back in his head and he was going to have a heart attack on me. So I looked at him and I said, right, Governor, I was a trader in the GFC. I was like, what was your biggest problem as a central bank? He's like, well, it's delivery versus payment, delivery versus payment and financial stability. And I said, well, what if we all of a sudden now have a technology that can solve that? We can atomically swap an asset. And what happened with Lehman Brothers was that they were delivering us, that we were giving them bonds before they paid for them. So the whole level of how the financial crisis came about was because there was no DDP, instantaneous DDP. So there's always lags in clearing and settlement systems in financial markets and across every asset class. So to me, that was when I looked at blockchain, was the one thing it could solve immediately was the clearing and settlements. And all asset classes take forever to clear and settle. It's ridiculous. You could trade them instantaneously, but you take 3 days in a security market, you take 27 days in a water market, you take 1 day in a bond market. It's stupid. So the technology in itself can actually solve that problem. And to me, that's very important. So I think what central banks should be looking at first, because you can't also, outside probably the East Caribbean, the ECCB, which are doing a retail central bank digital currency, but they don't have any corresponding banks. So it's a very different model that they need to play off than, say, an India or a Kenya that should be dealing directly with people. So I think the way you build these systems is much more intricate, and it has to be country by country, because I don't think there's one solution for the central bank for the retail version. But I think if I could get all the central banks that I know to talk together and atomically swap their interbank currencies as a token, that would solve free trade agreements. It would solve so many problems we have with reliance on the US dollar. I think that should be a much bigger focus of the central banks at the moment, not seeing how they can bank people, because there's enough people that bank people. But I think if they had a mechanism where they trust each other, and it's, if you have a group of central banks in a network, they all do trust each other. They don't need to, but blockchain makes them trust each other with mathematics, not because they like each other. You could actually solve some of the biggest problems that we see in the emerging world, like across Africa, across India, Latin America, because they still have this reliance on the US dollar. And with what's going on this year, that's starting to lose its wane. And, will the Chinese take over with dominant currency? I don't think so, because they won't be placed very well in what they actually do, manufacturing stuff. So I think it's interesting, but as I say to them, just be careful what you wish for, because I don't think it's a one size fits all. I think there has to be different ways that you can play with the technology. And that's the other thing. Should we let central banks go and start to implement retail central bank digital currencies when they don't know if the technology actually works? Is it going to scale? Are they going to have a problem where it falls over on the population in 3 days?
So do you think, more emerging countries that may not feel as secure about the ability to operate their own sort of private blockchain for their central bank currency, turn to some of the major public blockchains? Ethereum is obviously one of them, but there are numerous others now that are probably large enough to seriously consider. I believe the French government, for example, selected Tezo for their currency network. So do you think that's the way to go?
So I do, and I think what we'll see, and the Bitcoin maximalists will get upset with me, as will the Vitalik Buterin followers in Ethereum. What I think you're going to see with public blockchains, because if you speak to Robert Kahn about the internet, so what was the one thing that he didn't solve when he built the internet? When he said hello to Vince Cerf, there's no security on the internet. So I think if you look at blockchain in its crudest form, Bitcoin solved that security problem. Then you had Ethereum come in, you've got Tezo coming in. I think what is going to happen over the next decade, maybe sooner, because the technology is moving at such a pace with innovation, you're going to see a lot of these protocols mold together. And I think they have to start to be interoperable. They have to start talking to each other. Get over the ego thing that we have in the crypto world, because there's a lot of 20-something-year-olds with a lot of ego, and there's a lot of men doing it. So I think what you'll see is some of these protocols start to merge together, and they will just create this new security layer on top of blockchain. Which I said to someone, you don't know that from what the first transmission control protocol that Bob wrote for the internet, there's 39 more protocols on top of that. None of us know that. My daughter uses the telephone and doesn't care. It's an infrastructure. And I think what you'll see is that all these different protocols are infrastructure builds now.
But the good news here, Loretta, is they are easily integratable, and they're already examples. I deal more in the Ethereum, Corda, Hyperledger Fabric world, and there are already solutions that allow effectively the capturing of assets in one network and then the issuance of basically mirror assets in the other. And you're running effectively now ledgers between blockchains. But that's easily going to happen now. I'm just sort of thinking, what do you sort of see that this is going to create such an impact on the existing financial services macroeconomic environment that in itself will sort of see, during periods of high innovation, the invention of the car or, the post-World War II era, you could see an absolute boon in industrial activity and economic growth.
Absolutely. I mean, I think that's, innovation is going so quickly at the moment. Like when I first started to look at blockchain, back in the day, I mean, when DeFi has come along, I just got around writing ICO regulation in 2018, boom. 2020, I've got to worry about DeFi. So, I mean, and I understand the technology and the space pretty well, but there's a lot of regulators at central banks that don't. And to me, that's the worry, is that they don't understand. It's like the GFC. People didn't understand what the hedge fund kids were doing, with dark pools and black pools, when they were trading their algorithm on their stock levels. But that had a huge impact on the world. I think financial markets still don't believe that the technology can effectively make them, what's the word?
Better?
I shouldn't say that because I don't get in trouble. But I think, if you look at the way the DeFi is going, in the next 10 years, banks who are just doing banking functions, wealth management, as I said, asset trading, borrowing, lending, those things are going to become so incredibly embedded into technology that the way that we trade markets and the way we interact with our banks is going to look nothing like it does now. And banks won't be the major players. I think smaller fintech companies and the more agile companies will start to take away the edge that the big banks have had for since post World War II.
So, Loretta, you've got the ear of some pretty big players, quite clearly, that are involved in legislation here.
They're just people.
I'd love to know a bit more about what you're saying to them. What's the best and the worst that you're seeing in the Bitcoin and blockchain space in general?
Well, I mean, I think when I've had Bitcoin for a really long time, I'm such a believer in it. Ethereum I have, but I mean, I just think that Bitcoin is digital gold, and I think buy beware, do what you want, but only ever invest as much money as you're prepared to lose. And I always say to regulators, you can't stop people using technology. I can't stop my 16-year-old. When she was trading CryptoKitties, it was like I couldn't stop her. But what I can tell her is that there's risk. Every asset class has risk, and no one asset class goes one way forever. And I think that's important because I know a lot of the millennials out there going, Bitcoin's going to the moon. Everything that goes up and goes down. So these are cyclical cycles, and we've seen them in every other asset class for centuries. And we'll continue to see that. This is not going to be any different. You'll get highs and you'll get lows, and then so only ever invest what you're prepared to lose, and buy beware. And I think that's all regulators are trying to say is don't do something you don't understand. You've got to understand what you're doing, and then that's your call. You do whatever you want with the technology. So I think governments and central banks have been baffled because I don't think they actually thought until Libra came along that this was going to be any sort of a movement. And I don't think I remember saying to someone at the Australian Financial Review in 2017 that Bitcoin would go to $25,000 sooner rather than later, and they're like, no, it won't. So, well, it's not going to do it in the next couple of years, but you watch it. And I think because now you're seeing a lot of the institutional money can't stay out. They can't stay out of it. They're going to miss out, having exposure to an asset class that they can't miss out on. So I think that's why the markets are moving so big at the moment, because all the institutional guys that wouldn't normally come in have gone, all right, this thing is not as immature as we thought it was. And 3 years ago, to be frank, cryptocurrencies still look pretty immature.
Can I just jump in quickly there, because we're talking about the price of Bitcoin, institutions coming in. For me, I think a six-figure Bitcoin has always been a no-brainer. I wouldn't have put 5 years of my life into telling people about Bitcoin if I didn't think that. I see some issues on the horizon, and the first one I'd like to talk about is the whole issue of mixed Bitcoin. There's some hardcore Bitcoiners out there who certainly have a lot of influence in the space, sit on a lot of Bitcoin, possibly more to the point. if they are mixing Bitcoin, how do you see regulation playing out on that particular issue moving forward? If institutions are starting to take a position, how many hops are we going to be going back, and what sort of chain analysis has been discussed? Where are we at on that one?
Yes, choose your own adventure. I mean, I think it's going to be interesting over the next couple of years, because I don't think any of the the FATF have been talking about a lot of this stuff. Things like the travel rule. I'm still a bit worried, because I don't know if the institutionalized world is ready for what we're seeing, and that's why I think we've had this big jump up, is because they're not ready. I think over the next couple of years, that's going to become a really interesting issue. How it's
a huge issue, and it's just not been spoken about enough at all.
No, and it's and that's the scary bit of it. I think it's a funny asset class, I say to people, because I said, any other asset class you'll always find a buyer and a seller, always. But a lot of the people, or the Bitcoin maximalists that hold Bitcoin, don't hold it to do anything with. They just hold it to hold, and they don't trade it. So it's not.
And a lot of those maximalists want to see every single Bitcoin mixed, or effectively tainted, would be another word, which for an institutional investor, I'm not quite sure if they understand this.
Yeah, that's going to be very problematic. And there are, as you talked about, doing the chain analysis on this stuff. I think some of the players in the market, like the chain analysis guys that do the in-depth studies of this, are becoming much more savvy. Incredibly, but it's blockchain. I mean, that's the thing. People forget that it's on a distributed ledger that's immutable. Hello, you can track it back to where it came from, and law enforcement are starting to see that, and they're starting to see the benefits of Bitcoin as opposed to people laundering money with cash. So I think it's an interesting forward, but I think the more technology that comes out, and some of the companies that are doing it around the chain analysis are incredibly. It blows my mind. You look what chain analysis does, and how they can track and trace almost anything.
Do you think there's a looming battle then between maybe some Bitcoin maximalists that would consider them sort of, white hat against the black hat?
The black hats.
Their opinions, the chain analysis people. I know this to be the fact. I know a lot of the core devs. I've been around these guys, or this whole community for a while. I see some issues here. I really do.
I see a lot of issues, but it's also, I see a lot of men, a lot of egos as well. And it's like, I always wish in Bitcoin there were a hell of a lot of older women like me, and the developers were actually writing code and not looking at it from being a 26-year-old male. You can actually look at things with a different perspective, and I think gender is very important in this, because at the moment there's none of that. But I think mixing it's problematic. But I think as it becomes more problematic, the technology gets better to be able to fix that. So I think it'll sort itself out.
You think we could end up with a world where part of the Bitcoin asset totally is legitimized, and there's another big piece of it that probably sits in unlegitimized channels or wallets?
Absolutely.
I think that's inevitable.
Yeah, it's totally inevitable.
No, absolutely, yes. It just means, however, that the piece that's actually legitimized is even worth more.
Yep.
Because you've basically limited the supply even further.
So I was going to say, your supply's just shrunk to quite a significant amount, and it's all about, why do people buy stuff? Because it's FOMO. It's like, oh my God, I like gold. Why do people buy gold? It's the most ridiculous asset, because you can't do anything with it other than wear it. I find, and I lived in India, and I found that was the funniest thing, that everybody wore gold, but to liquidate it or do anything with it's ridiculously difficult to do so. And I think. Yeah, I think this is going to be a big problem going forward, and there will be two different worlds, and I think that's inevitable. Like you'll have the people that value their privacy much more than they do in the other part of the.
Loretta, I would say that the best use case for Bitcoin currently would be somebody with a certain, a decent amount of money, maybe living in an emerging economy in the third world. An Argentinian farmer. If you're worth $500,000 in US dollar currency, you're an Argentinian farmer, you'd 100% want to be in Bitcoin. but the person living in a slum in Argentina, onboarding into Bitcoin, actually getting it very, very difficult. What do you see as the best current use case of Bitcoin, and more importantly, why you hold it? Why?
Because I hold 3 assets. I hold gold as well, which I like gold. I think digital gold is worth holding. That's what I think Bitcoin is, and real estate. And the others I don't touch. Secure, I just find everything else just superfluous now. I think, Bitcoin from the maximum perspective is the libertarian way of freedom for everybody and financial inclusion for everybody. I think to a point, I do a lot of work in India and in Africa. I'm absolutely gobsmacked at now the upturn in people in Nigeria or in Kenya buying and holding Bitcoin. And I think the reason is, and we forget that when we sit outside the region, in Africa, in Kenya's had the M-Pesa. So they're used to mobile money. They've had mobile money because most people didn't have bank accounts. So mobile money has been a big thing for a lot longer than it has been in the rest of the world. So Africa is an interesting one because the adoption of the population in Bitcoin is much, much easier than people think for the people on the street, because in Nigeria there's a problem. The central bank are not issuing money. So everybody's now holding Bitcoin. And you saw that happen in Venezuela. So I think because it is an ability that we can bank people, and everybody has access to it, and kids can just have a telephone. And I've seen some amazing kids in Africa and India, entrepreneurs that can pick up and teach themselves now by having an internet connection on their telephones and a smartphone than they could have 20 years ago when they still had to book. So I think it's become a great leveler. I think it's one of those things that everybody can access. Like when the internet came around, it democratized media. I think Bitcoin is starting to democratize money.
Loretta, JP Morgan came out with a paper quite recently that indicated that they thought that the rise of Bitcoin actually could be at the detriment to gold, that investors will rotate out of gold into Bitcoin as it becomes adopted by mainstream institutions who typically, manage their wealth portfolios by, certain allocations into various asset classes. Yep. So, there's $8 trillion worth of gold in the system today. Bitcoin's sitting in there about 400 billion in total asset value today. Obviously has a lot of area to grow, but you could sort of predict where it starts to get to a point as a component in the economy like gold. It would
absolutely
value, yes?
Yeah, absolutely. And I think that's the interesting thing, because people like to hold stuff that's scarce. That's just human nature. But just remember, this is very important. And I think it's taken Bitcoin a long time to get to $25,000, because most people that are investing in Bitcoin and other cryptocurrencies are millennials and younger. The people that hold all the assets in the world are people older than me, the baby boomers. So you've got to look at that in context of where the millennials are starting to get money, but they don't have the wealth collection that the baby boomers do, and they will. And the people that hold gold are still those people. So that's going to take a number of years before the millennials sort of get up, but they're becoming wealthier faster. And I think that's an interesting dynamic that cryptocurrencies has brought into the mix. But they still don't hold the majority of the assets like the baby boomers that do. And the baby boomers want to hold gold because guess what? They can touch it. They can feel it. They don't know what Bitcoin is or where they can touch it, and they feel it. And that tangibleness to those people is still very important. So I don't think that's going to happen in the next anytime really soon, because until the baby boomers are all dead, they're still going to hold the majority of the wealth allocation.
Well, not necessarily. Raoul Pal, one of his podcasts, I thought made a really fascinating observation when he basically said, look, where would you put your money today? The baby boomers back in the 80s had, good markets to basically grow wealth through investment in real estate. And, as globalization occurred, there was all sorts of upside in the equity markets and other capital markets. So he said, but today, if you're a young person, you don't see, any value in the stock market. It's pretty much overvalued as it is. Real estate markets as well, relative to real incomes, they're a very expensive asset these days. So he feels that for the younger people, this will be the thing that they will invest in. It will be digital assets or...
Yes, no, I totally agree on that. I totally agree, but I'm saying until the baby boomers are all dead, that's not going to happen. That's not going to be an absolute quick shift, because the baby boomers, wrongly or rightly, still hold the majority of the wealth allocation. And until we see the millennials move up to age, come up to speed, that's still not going to change,
Well, the reason why I suggested it could is because the millennials today that have already invested in Bitcoin, which are largely young people, now sitting on $500 billion of wealth, which soon could be worth trillions. And you've also seen a lot of people, young people, make money in the ICO markets. So what would happen is, as they continue to go into those markets, the wealth and the assets being held by the baby boomers may actually start to deflate in value as those assets start to increase in value, and therefore actually facilitating that transfer of wealth across the two generations.
Yeah, I do agree with that, but I just think it's not going to be an instantaneous thing, because I think a lot of people have miscalculated the amount of wealth that sits with the baby boomers. And to your point though, the millennials always say to regulators and central banks, you've got to understand that the millennials understand risk much better than any of us ever did. My father or myself, you'd trade a stock and you have a stockbroker and he'd come to Loretta. My argument is, since the GFC, that the millennials really understand risk. My 16-year-old understands risk better than I did at probably 35, and they've learned the mistakes of the GFC. I don't think the people in my generation or the baby boomers or the people running the banks around the world actually have. And I think that's going to be to their downfall as well, because they don't understand or comprehend how this generation can understand risk far better than they did.
So, hey, listen, on that note, it's quite an interesting one. So, slight divergence, but, let's take the likes of a Larry Fink, the CEO of BlackRock, who in the last couple of weeks has said, look, Bitcoin could turn into something real, even sort of suggesting it could, make the USD less relevant to international holders of the dollar. Maybe a little bit far-fetched. But my question to you, Loretta, is, who do you think's got the real sort of power and influence to shape the future of digital assets and currencies? Is it the likes of the Mnuchin, or is it a Larry Fink, in your opinion?
I think it's all put together. I think this is a movement that's coming from all angles. So you think about it, you look at the market, how it's come up. When the market dipped, it was back in March when we got to 3,000. I was in South Africa. I remember I was on a safari ride and Bitcoin dipped to 3,000. Had you have said to anybody that it would have made a new all-time high 11 months later or 10 months later, no, it was just unbelievable, unheard of. You wouldn't have thought that any asset class could actually move that. So that, to me, is also a bit of I'm a traditional banker as well. So that's a bit of a black shadow, I think, for me, because I was thinking if things go up so fast, they could come down again. Obviously the direction and the way that people are now starting to invest in Bitcoin, you've got all the institutions, and Jamie Dimon, you can go and eat your words again.
But, Loretta, when gold became an...
Shout out to Nouriel Roubini as well.
Oh, God. He's a very annoying man.
When gold became an openly tradable asset, it too, in the 70s, it too basically was extremely volatile for quite a long period of time. So in some respects, this is nothing new.
No, it's what I'm saying. Asset classes go like this all the time. It's nothing new at all. And I think just, for the millennials watching, just remember that. It's like you think that what you do now with DeFi and Bitcoin, it's totally new and you've changed the world. It's like we've done this for years, but we didn't have technology. Those of us that are diehard traders, it's your gut. Well, the best traders I know in the world trade from their gut, not what they read on the screen. But the volatility means that you make more money. And if you're trading stuff, but beware. I always say to people, just don't put every last cent you have into it. And when taxi drivers ask me, should they be buying Bitcoin, I go, I only put in as much as you can lose.
Loretta, after the comment, there's people screaming at the screen right now going, look, you've been trading for 30 years in every possible asset class. You've obviously got a few Bitcoin. Come on now. You're going to have to give us a price prediction. Yeah, a year out from now and 5 years out from now, what are you calling?
I think it's going to get to 50, then 100, and then at some point you're right, it'll go beyond that. It's like the real estate market, though. It's like these things are moving. The more people that do it, the more buy-in you get, the bigger the asset. So I mean, I think that's what you're seeing at the moment. You're seeing this movement come from everywhere. But I'm always the sensible mother in the room. Just don't put in money you can't afford to lose, because we don't want people that are taxi drivers or rickshaw drivers in India investing the family life savings into Bitcoin and then it moving down. So we don't want that either. We have to be responsible and respectful that, we understand, but the people that don't understand are the ones that are going to get burnt. And I think that's really important. But I think, we're on a trajectory to keep going up. I think 100,000 is not out of the question in the next, little while. No.
Well, the World Economic Forum, Loretta, predicted themselves that the 10% of global GDP will be basically traded as some form of digital asset by 2027. So
I think more like 2025, because I think that's a different conversation, because what happened with ICOs and digital assets? Why did an ICO become so popular? It was just a digital.
I think.
Well, it was the secondary market. So when you trade a security or I'm trading FX, the liquidity in the secondary market is impossible because there's regulation. So what you saw with ICOs, because there's no regulation, you saw this instantaneous liquidity action in the secondary market. Boom. If all asset classes had that ability to liquidate in a secondary market like you did in cryptocurrencies, things would have been different.
I'll put another spin on that, because it was easy as well. If you take my entry into the space, my knowledge of macroeconomics or economics in general, having studied it at university, but it was only in sort of 2016 when I came into this space where I realized actually how basic it really was.
Yeah, it is very basic.
The big thing for me here, and the thing that really fills me with so much joy and hope, is that we've got all these new ways that people can come into a financial system and be part of it. They can invest in something, and we're just making it easier and easier. And that's what I love. And it's fascinating to have you on the show. You're talking to regulators, and I hope they let this run. I hope they give us that ability.
Can I just add that this has happened before, right? In the music industry with, when we first had peer-to-peer exchange of music, it was all done through an unregulated market, and they shut down most of those networks, Napster being sort of like the king of them all. But many years later, where are we today? We have fully regulated solutions to deliver music through platforms like Spotify. So in some respects, if you look at music as it is an asset, it basically is all songs are effectively a copyright. So they are assets. We've actually seen this happen where we've gone from a completely pirated, unregulated market to a fully regulated one in a relatively short period.
Fantastic observation. Yeah.
I have them every now and again, Sean.
Well, I just think that the whole tokenization of asset classes it throws me. I mean, I love it. This is why I do it. It gets me up every morning. That I see now the liquidity functions in asset classes we haven't even thought about are going to come because of this innovation and this technology innovation. And I think that's why the tokenization, to be able to tokenize any asset class, to me is the most exciting thing that I've ever seen in my entire life. And we haven't even seen these new asset classes that are going to come out of it. I don't know if I'm alive, but it's going to be really interesting in the next 10 to 15 years. But what I always say is, you've got to also understand regulators are not technologists and technologists are not regulators. So there has to be somebody that brings them together to saying, you just can't go off and do what you want with the technology, and the regulators go, no, you can't do that, that's bad. There has to be a middle ground where they both work together and they both see what the other's doing, because regulators, I hope to think that we're not bad people, but regulators, they don't get technology. They've sat there with securities and commodities going, all right, that's good, this is how it works. There was, a post-World War II, they've done exactly the same thing. All of a sudden you're telling us to regulate this thing that we don't even understand what it is. So, and innovation is moving so quickly. As I said, from the ICOs to where we're sitting with DeFi, that's been 3 years in the making. My God, I'm trying to explain to a regulator why there's so many references to food is my hardest. They say, but why is it like, but the yam project or the sushi? They're going, what? How does that work? Does this mean they're adults or they're not? So so you get angst on both sides of the fence because they don't understand each other. They're two different beasts. But we have to collaborate. Like that's so you can't just think as technology and Bitcoin maximalists that we're going to have anarchy and libertarianism. That won't work. Like, we've also got to have order in the world. But the centralised way that financial markets have operated for hundreds of years does not work either. So don't we better to talk together and solve a solution that solves those problems for both of us?
I agree with you, Loretta, totally. And I think the new networks that will be built on top of the blockchain are going to create. It will allow us to implement far more complex and sophisticated economic models than the ones that we currently have today. Yep. And ultimately, call me a hopeless optimist, but effectively allow for a global financial marketplace to emerge. It may take decades. I'm not saying this is going to happen overnight, but you will see, I think, a far more robust global economic infrastructure that will be able to stimulate the economy and allocate, optimize the use of capital as part of that overall stimulation.
And the allocation of wealth. And I think that's the really key thing, is it because we talk about India and Africa. I mean, they've got, the biggest populations in the world. And guess what? They all have a smartphone, and most of them were born after 1991. Hello. And they're used to it. So I think when we talk about the US and Singapore and Australia and Europe, we forget that the biggest impact of all of this is not going to be there. They're not in these mature markets. It's going to be in these other markets that actually use innovation because they have nothing else to. They don't have the old solutions. They don't have legacy systems. I mean, you look, like people in Africa use the M-Pesa because they didn't have access to bank accounts. Now, I find the M-Pesa the most interesting story about how it was created. I know the man that built it out of Kenya. He was the Minister of IT and Innovation, but just on the last mile stuff. So there's lots of things, the leapfrogging of these emerging markets.
I mean, back in the days in the 90s with the PC boom, you found that, emerging markets like the Philippines and Vietnam were skipping over a lot of, they didn't have legacy infrastructure from wave one, which is all mainframes. And where they're rapidly deploying far more cost-effective, Unix networks linked into, desktop PCs running Windows everywhere. So
yeah, I remember that even in India. Like when I lived in India, I used to have to send emails to get visas and government officials all the time. No one would ever answer you in India on email. But you send them a WhatsApp, you could get the Prime Minister. And that's the funny thing. So India leapfrog. She missed the whole desktop, and people in the government weren't not answering you because they were being rude. They just didn't have access to PCs. But the mobile came in, hello, and they just went, woof. Everyone will answer you in the Indian government on a WhatsApp, but they may never answer you on an email. So that's, it's interesting, that leapfrogging in the emerging world. And because most people were born after 1991, you've got these young generations that understand how to use a smartphone. Everybody has an access to a smartphone.
That's what I was up to in India, by the way, around the whole sort of CDMA speeding that up. On that note, if we look at what China is doing, we've got this very centralized system there, but they're obviously trying to capture a hell of a lot of global capital with their far more efficient sort of payment gateways than maybe the US has. How do you see this new government coming into the US and their approach to fintech? Do you see a US central bank digital currency on the horizon, and how do you see fintech developing in the US in the coming years?
Well, the US has got a few situations to get out of at the moment. They've just had a write-off for the last couple of years. I think, you've got to also remember all the technology that we're talking about came out of the US. Everything comes out of US defence. So I think that's a key one to note.
Shout out Halliburton.
But the biggest revolutions of innovation and technology are in the US. So I wouldn't be surprised when the Fed goes, ooh, we're going to do this. But they do it in a very American way. The Chinese are obviously doing it because they want control. They want control of everything, and I don't like that model. I think it's dangerous, and it's not good for us as humans. But that's another point. But I think the US don't underestimate the regulators and the Fed in the US, because they will turn around with something that's very innovative. And I think this administration, see, I don't know. I think they're going to have problems just in a lot of things to start with. Are they going to be more progressive? I don't know. I don't know if it's the saviour that we think it is, or, you know, I do know that some people in the administration have been looking at, investing a lot more money in things like green bonds and decentralised systems to help, climate change. Maybe that where it plays off first.
Well,
I think
they've allowed in the US, Kraken has set up a bank.
In Wyoming. Yeah,
yes.
They've done that. So my friend Caitlin Long, she wrote all the regulation in Wyoming. We used to work together a number of years ago. Yeah, I think the bank license that they have is, and this is where it's regulation is key, because in the US you have 1,000 different regulators, and every state has a different regulation. Where I've written regulation and law, we've all followed the British system. So the English gave us one thing, the Commonwealth. The Commonwealth has the same legal system. So I can effectively replicate regulation across 53 countries. Whereas Europe's like a big jar of spaghetti. It's impossible to get anything done between countries. And the US is a nightmare because the states don't acknowledge what other states do. So I hope that works for them. I don't think it's as a bigger deal as people make out.
Well, I can actually see blockchain helping to re-engineer the way government's administered in the United States, because I agree with you that the fact that each state, the way they've got such a tiered system of federal, state, and then even down to county, different law structures or tweaks on the law structure, it's a nightmare. It can theoretically be automated, and they may want to maintain their autonomy at a state-to-state level, the US. You can imagine that. I don't think that would be an easy thing for any government to try to take away from them. So the other alternative is really to employ technology. I could see it happening in their electoral systems very quickly, given the nightmare that just expired after November 3rd.
You saw that my friend Brock Pierce, he voted on the blockchain. He was running for presidency, and I think that's one solution. The US could be so much more transparent and efficient if they could blockchain their bloody voting system.
Look, my only regret was that I wasn't a US citizen to vote for Brock Pierce, so a damn shame. I'll have to vote for you, Sean, when you run for... no, you're a New Zealander. That's no good.
Prime Minister of Australia.
Oh, no.
Well, there's enough Kiwis in the country for that to happen one day.
It's a slow but steady process. We will get...
I think it's actually a policy that was launched by New Zealand a few decades ago. What was it, Muldoon, who...
I'm amazed we've managed to go for over an hour without any jabbing of the Kiwi. Well done.
Piggy Muldoon, your Prime Minister, described when asked by your Parliament, what does he think about all these young New Zealanders heading over to Australia? His response was, it will raise the IQ of both countries.
Well,
I took offence to that, by the way, Sean.
You said it, not me.
I took offence to that along with a bunch of other Australians. So, we have long memories.
Hey, Loretta, we've been going for an hour and a quarter. I just want to check. I know you've only just got out of quarantine. So you
and it looks like it might be going back in.
You're not sort of itching to leap off. How long have you got before we wind it up?
No, I'm good. I've got one call, I think, at 8. I don't know what time. I live on this 24-hour.
We're both immensely enjoying this chat. So just let us know when you're when you need a wind.
When you've had enough.
I have a hard stop at 8 p.m. It's break time. What was that?
I said, just let us know when you've had enough, Loretta.
I think Dan Carter is the best rugby player I've ever seen, though. And I have to say, the World Cup, the All Blacks World Cup rugby team when I was growing up were legendary, and I still do think they're the best in the world. You play much better than us.
I'm not.
I like you, Loretta. I want you back on this channel as often as. Sorry, Lawrence, you're fired as the co-host.
No, look. Does that mean I can go to dinner now, Sean?
True, I didn't ask you. Yeah.
If I'm fired, am I off air right now?
What time? Well, 7:30 for you in Perth.
Yes. Well, it's quite a nice evening here. Actually, we've been sort of having an excellent December. We're now moving to the weather, Loretta. We do it at the end of our news.
Oh,
segment.
let's have a general life chat. I mean, Sydney, one of my favourite places on the planet. You've obviously been living abroad for a long time. Where have you been? I mean, I know your story. It's quite typical. It's very similar to Lawrence's. We leave in our early 20s and go and explore the world. Are you back to Australia now for a while, or what's
No, it's just I've been accidentally. So in my world of blockchain and doing regulation, I think I spent from 2017 to 2019 just on a plane. I spent more time in the air than I did on the ground, and yeah, it was good. So at the beginning of the year, I got locked into Mauritius, and I'd seen my daughter at Christmas, and she's 16, so she'd gone back to Australia. I came back to Mauritius from, I think I'd been in London. I mean, I got locked into quarantine 2 weeks before the country did, and we've been locked ever since. So I got meningitis, which was really awesome, getting one virus.
I had that in Mumbai.
I couldn't feel my face. I lost all. I thought I'm going to die, but I'm just going to die.
I don't like getting anything that ends in itis. Just personally, anything that ends in itis is bad news, Loretta.
Well, I lost a complete feeling in my face. It was not fun. So I guess I call Mauritius home, but my daughter lives here, so I eventually got out 2 weeks ago. So I've been sitting in Australia, but I'm leaving in, if I can, the first week of Feb.
Back to Mauritius.
Yeah. Okay. And then I may move to Nigeria. Watch this space.
Oh, wow.
I work for the financial intelligence unit in Nigeria.
You have I get the feeling, Loretta, that you remember the guy Harvey Mangels who used to travel around the world in the 80s. He was an Australian. He just liked going to, really sort of outback places into Africa and whatnot. And he did a lot of documentary series. You basically, I think, have the same sort of interest in terms of seeing a lot of the emerging market.
I love it. I mean, the only problem is a couple of times I thought that I'd been kidnapped, but other than that, I'm good. I've got some great stories. But I find the emerging market so much more interesting to me. I mean, I find I live in Sydney. I find it very bland. I mean, I lived in India, and it's beautiful.
Where did you live in Mumbai, by the way?
I lived in a number of places. I lived in Breach Candy for a while. I lived in Bandra. I lived in
Bandra. That's where I was based.
Bandra's awesome.
What a shame I didn't meet you there. I must have just missed you, actually. I was 2003 to 2005, and I think I saw 2 or 3 other white faces the entire time I was there.
I think she was just avoiding you, Sean. She could see you coming, and she was.
There is that, Lawrence. There is that possibility. Yes.
I don't think I actually had any foreign friends. I'm trying to think. I actually think all my friends the entire time I stayed in India were Indian. I don't think I had any expats, but there were no expats.
There were hardly any expats when I was living there then. I'm sure that's different now, but.
My daughter grew up speaking Hindi, Marathi, Tamil, and.
Oh wow.
Yeah, and she could write. I sent her to a Hindi reading school, so she could write it as well.
Yeah.
They used to try and put her in Bollywood movies all the time. I was like, she's blonde-headed, blue-eyed, and she's about 6'4". She doesn't look Indian at all. They said, no, but she's good for advertising. I was like, but that's fake.
Or she could play the villain. I mean, usually that would be the role for.
Or she could dance
in an Indian movie, I would think.
Yeah, there's always the heroine, the hero, the villain. There's always a dance scene, a murder scene, and a love scene, and they can take up to 6 hours.
Hey, you must have a bit of insight into some of these smaller countries. Do you see a central bank play into holding Bitcoin as a treasury asset? If we do this great reset, are they going to roll up and go, well, we've got X amount of billion in Bitcoin?
I think they already are.
Yeah.
Yeah, I don't think it's any secret that there are some that are.
Do you think that'll be a domino effect?
Well, it depends on what you. I mean, the central banks they have capital reserves, mostly in US dollars or in some sort of asset. I think what you're going to see more likely as a move, and something I've been looking at for a long time, is having some sort of stable coin equivalent to some of these markets that have music, that have tourism, that you could actually peg into a basket of assets, non-tangible assets. So their GDP modelling could be on the bigger basket than they're carrying at the moment. And I think cryptocurrencies would be one of those. So I think, yeah, that's definitely on the cards. And certainly with ones that I talk to, I think because they don't have this inertia. I think that's the interesting thing about some of these countries is that the legacy systems are not there. They don't have to jump through the 20,000 different hoops you have to get through parliament systems. When I went to Bermuda and wrote the Digital Asset Business Act, I'd met the Premier at Davos, and I was speaking at an MIT conference. He said, "Loretta, can you come to Bermuda tomorrow?" I was like, "I don't know where Bermuda is." And he said, "Well, it's in the middle of the Indian Ocean."
Triangle somewhere, isn't it?
Yeah, the middle of the Atlantic Ocean. And I said, "What are you doing?" He goes, "I run it. I said, "All right, Premier, but I'm not coming." He goes, "No, come. You have to." And I said, "No, I'm not." But so me and Joseph Weinberg, we agreed to it. We jumped on a plane and we wrote legislation in 3 months. They moved faster as a country than I've seen a startup move. So I think the ability for smaller nations to take the lead is growing more and more every day. It's not going to come out of the bigger legacy system economies.
Sure.
And why wouldn't you? Why wouldn't you? If you've got a small country, you've got nothing to lose. You've got a US dollar dominance, and what are they going to say? Oh no, you can't do that.
I agree. On that note, look, I'd love to have you back on the channel, Loretta. It's been a fascinating conversation. I've really enjoyed it.
So I haven't scared you off.
Hell no. I mean, it's, I'm really Lawrence and I are trying to get a real sort of cross section of the best and brightest in the in the blockchain space. We've had some very big guests on this Hard Fork series, and I reached out to a number of people and said, "Look, find me that hidden gem." They came back with you. And the more I've looked into what you're doing, it makes me personally feel quite relaxed knowing that someone like you that's so passionate about the future of Bitcoin and digital assets is out there talking to these big players and helping shape policy. I've never
been scared of anyone. I think that's the thing about me. I've lived in India for 10 years. You learn to get over that. And so I'm always happy to be the Joan of Arc that stands in front of the ecosystem, because I think a lot of the time they don't listen. And when the grungy Bitcoin guys come in, I went, "Okay, now if you come into a government with me, you've got to wear socks and you've got to clean your teeth." I have 2 rules. I carry spare socks and toothbrushes. So if anyone wants to come with me, more than happy to take you in, but they're the rules. And I think that's important because they wouldn't get the opportunity to do that otherwise. But I think they both have to speak. And I'm really good at putting groups of people in a room that don't like each other and making them talk. But that's a female trait, I think. And I think that's what Bitcoin needs a bit more of, the motherly types.
Yeah. Look, I'm sure this episode is going to sort of kick off a number of questions from our audience. Well, maybe Lawrence, if you want to wrap it up with.
I was just about to add. I'm sure Loretta, if you don't mind, we want you to be our go-to person every time we need to come and talk about what the hell the central banks are up to.
He's me. He's the filter. Happy to. I'm the whisperer. I'm the governor whisperer.
No, and we want to hear everything that they're whispering off you. I think the role that they will play as part of this overall transformation, at a macroeconomic level, is going to be fascinating over the years. And you're sitting there at the epicenter of all of that. So it was very appreciated of you making time to come on the show.
No, I'm sorry I was caught up in the last couple of occasions. I do apologise, but it's been great. And I'll come back anytime if you'll still have me.
Oh, 100%. Look, on that note, how can the audience learn more about you and get in touch?
I'm on my LinkedIn, which is Loretta Joseph, or my Twitter. What's my Twitter?
I know your Twitter. You're the real crypto mama, aren't you?
Is that? I think that's my Instagram.
Anyway, the link is below, people. Follow this wonderful woman. I've been really real pleasure finally getting to meet you.
I really enjoyed it. But I'd hope to think that there are more people like me and there are more women than just me out here.
Well,
all I got to add, Loretta, is don't stop believing.
No, don't ever. I've been a Bitcoin believer for the years, and as much as pushback I get from people that look at me very sternly, it's like, I think they're starting to turn around. And if I could get a chance to smack Jamie Dimon across the head again, I probably would.
Yeah, well, look, your other hashtags are we're all in this together, and collaboration is the new survival. And I think they're fantastic hashtags, and Great to team up with you, and would both love to continue this conversation on many more occasions. It's been
happy to, and I just hope for all of us that 2021 is not the shit show that 2020's been. That we're all not stuck in.
I don't think it will be. I think things are looking fairly good going into the year, but yes, anything can happen.
Anything can happen. And on that note, Lawrence, it's Friday night, nearly going on for 8 p.m. in Perth. I'm sure you've got something super exciting planned. So we'll.
Yes, I think I'm going to be sitting. There's a test match on TV, Sean. They've now wisely played test into the evening. So I'll be sitting in there watching Australia versus India, because not everything about India is the blockchain as far as.
I do sit on the advisory board of an IPL team, so I'm pretty good at Indian
Do you
cricket.
really?
Excellent. Yes.
Which
We'll take you to the cricket next time we.
I'm a total cricket tragic.
I love cricket.
Test match cricket, I think, is one of the most exciting things ever.
I love cricket and rugby, but I'm Australian.
You're
God bless you,
perfect, Loretta.
Yeah.
And I'm a big fan of the Kiwis, so that's another brownie point I have there.
I'm gonna get you a hard forking T-shirt and.
Please do. I can wear it alternatively with my "Don't Stop Believing."
You're an easy sell, Sean. Basically, just say a few nice things about New Zealand, and you're on the show.
No.
Well, I think that was after the call to come on the show. I don't think I gave anything away that I liked the Kiwis.
Not them. Hey, listen, I've certainly had a good look into what you've been up to in the space, Loretta, and it's, as I say, once again, it's fantastic as a Bitcoiner to know that you're out there talking to people that are involved in the legislation of how the space is going to look. So,
and it's just people. That's the other thing we've all got to remember. That we're all people. And it doesn't matter where you come from. We're all born the same way and go out the same way. It's my generalisation of us as being humans. So we're just people.
All right, Aussies, let's do this again.
Cheers. See you later, everyone.
Thank you very much for watching, everyone. Cheers.
Bye.
Now.